All right, thank you for joining me at FutureMoneyTrends.com. I'm here with David Morgan, an economist who runs Silver-Investor.com. He's also the author of Get the Skinny on Silver, which was written way before everybody else came out with their books on silver. David, thank you so much for being with us today.
Well, Dan, it's good to be with you.
David, I want to get right into this. We're members of your free service. We're members of your special area. You do a lot of consulting for a lot of very smart people around the world. Our audience is dying to know, what are your thoughts on the silver market right now? What the heck happened this week?
Well, what happened is we had a big sell-off, and the metals, both silver and gold, got smashed down pretty hard. There's lots of explanations going across the internet, and a lot of them are valid. Primarily, all markets move, as we all know, on buying and selling pressure. There was huge selling pressure, and of course that leads to the why. Why was there big selling? And there are really more than one answer to that. First, I think I'll defer to Max Keiser, and Max came out a couple of days ago and said that there was huge selling in the SLV and the GLD, and for the listeners, viewers that don't know, I'm sure most do, these are ETFs, or exchange-traded funds, that purportedly have the physical underlying asset, the SLV being a silver ETF and the GLD being a gold ETF. I did check up on what Max said as far as volumes, and the volumes involved were huge. So huge selling, lots and lots of selling, which would drive the price down. And that could be true. Max's take was that people that own these, primarily managed money, hedge funds, that type of thing, realized that with this MF Global debacle, that owning the GLD or the SLV or both, really you've got a lot of counterparty risk. Therefore, they were selling these assets and moving into the physical realm. Whether they were moving into the physical realm or not is more difficult to determine. But that's what he was stating. As far as why, there are other reasons. Primarily, we're in a liquidity squeeze. A liquidity squeeze means that you have to sell whatever asset you have to get to cash to make settlement of some type. In other words, a margin call, a debt, pay off a loan. You need to have cash for some type of payment or settlement. And regardless of how big a gold and silver believer as I am, the market has to be settled in cash. So even if you own gold, now many, again, of this managed money or funds own gold on paper, and it's about the only assets they're looking at on their books that are positive. So what these banks do is exactly the opposite of what an individual investor or a good hedge fund manager or a good money manager would do, which is to hold your winners and sell your losers and recycle the losers into something good as quickly as you possibly can. The banks do just the opposite. They look at what's making money for them on their books, which is gold and silver investments, sell those, and they hold on to their Italian bonds or their Greek bonds or this bad sovereign debt they're holding on their books. They don't want to admit how bad things are in their sector, in other words, in the financial or banking sector, hold on to these really very poor performing assets that are probably only going to get worse over time, and they sell the winners, gold particularly. So that's really the other explanation for why we have the sell-off.
When you're watching the news right now, looking at different stories and blogs and things that you're focused on for your clients, what are you looking at right now? Are you looking at the U.S., Europe, China? A lot of people are concerned that we may be going into another Lehman moment. Is that one of your concerns?
It is, in a way. I think, first of all, I think that we are looking at something similar on the European side, not on the U.S. side. The banks in the U.S. have been reliquefied. So if we were to repeat 2008, and I said if we were to repeat 2008, the U.S. banks have got tons of liquidity so they could meet any kind of demand for cash that came up. That's not necessarily true on the European side, but it's being rectified as we speak, meaning that the Federal Reserve has the experience of 2008, saw how close we came to going off the cliff. So we're well aware of the illiquidity in the European system. The problem with the euro is that they don't have a central bank. They have the ECB. I'm not saying they don't have the European Central Bank, but they don't have a bond market that's equivalent of the Federal Reserve's bond market. So in other words, there isn't a unifying bond market for the ECB to issue. Now, they're being talked about that. So you have sovereign debt of each individual country. So even though the currency for Greece doesn't exist, and in reality it does, you can short the Greek bond, you can short the Italian bond, and that's basically their currency. So there's a bigger problem. Nonetheless, the Federal Reserve is at the ready to liquefy the banking system within the Eurozone and do whatever it takes. So are we looking at a Lehman moment? I think we are in a way. Will it manifest similar as it did in 2008 in the Eurozone? I don't know for certain, but I doubt it. I think that the powers that be are still in place, and they'll throw as much paper at it as they possibly can to prevent, again, the situation that we saw in 2008 where we darn near went off the cliff.
Now, in 2008, pretty much most people were shocked and surprised about it. Obviously, you had been forecasting a situation that we did face in 2008, but there weren't that many people out there saying stuff like that. When you look at if we're going into this situation here, how do you think the precious metals will respond? Do you think we're going to have a sharp pullback, then a snapback, or do you think we could get hit really hard again like we did in 2008?
Well, I think it's going to be similar to 2008 again. I mean, these markets usually lead, and what I mean by that is with gold showing weakness here temporarily, and silver as well, they're forecasting an event of some type, in my view, that is negative on a temporary basis to the metals, because let's face it, regardless of what your belief system is, you have to settle in cash. And I know I already said that once, but I want to emphasize the point. So no matter how big a believer you are in the ultimate currency, gold, it doesn't matter when you get a big, huge margin call. You have to sell something, some asset, to move it into a euro or into a dollar or into a Canadian dollar, whatever the settlement vehicle is. You have to move it to cash. So that puts a lot of downward pressure. So what do I think will happen? I think we're going to see further weakness in the metals for a fair amount of time. I'm looking for a fairly weak first quarter of 2012 for the metals. I also believe strongly that if you can buy physical metal for silver under $30 and for gold under $1,600 and have a time horizon of a couple of years, 3 at the most, that you will easily double your money on those metals. However, that doesn't mean that I'm picking an exact bottom here. I'm giving you a ceiling more or less. If you want a bottom pick, which is extremely difficult to do, then I would suggest that whatever capital you wanted to devote to the metals, that you divide it into like 1/5 or 1/6 and buy over the next 3 to 6 months at a dollar cost averaging basis. And I think coming out the other side. Now, just because I believe the metals will at least double from here, and that is a minimum, doesn't make it a fact. It just makes it a very strong belief on my part. Going a step further, if we were to get a washout in silver like we saw in 2008, we basically had a short squeeze going on. Let me explain that. What happened at that time was that silver had 2 set prices on it. It had the paper price on the futures market of roughly $9, somewhat below that. And it also had the honest-to-God price, which is what you could buy it at a coin dealer for, and that was around $13.50. The discrepancy was that we weren't out of silver, and some of the folks on the Internet get it wrong, not many. But silver in commercial bar form, 1,000-ounce bars, you could take off the exchange for $9. I know I did it. But if you wanted to buy a 100-ounce bar, Silver Eagle, Silver Maple, 1-ounce round, any of what I call the retail silver products, you had to pay about a 40% premium in order to obtain those particular silver items. It also held in gold, not to the degree that it held in silver, but somewhat. So even a gold retail product such as a Krugerrand or a Gold Eagle or a Gold Maple or whatever held some pretty good premiums on them. So that showed that people are not as naive as many believe, that when they see a huge opportunity, that there were people rushing into these markets to try to gather as much physical as they possibly could. Now, the market snapped back, as we know, and I think, again, if we were to see something similar, I don't see that scenario playing out to that degree again. But if we were to see something similar, I also believe that it would obviously come back, over time.
That leads me to a good question. Where are we overall in the bull market of the precious metals? Because obviously we have all these different events going on, some deflationary, some inflationary, especially the man-made ones from the central bank. But overall, looking at the industrial supply and demand, where are we in the big picture for silver?
Well, great question, and I'll give you my best answer, obviously. Right now, we are in, I think, nearing the last stage of the bull market. These bull markets in commodities normally go about 17 years on average, and we're in about the 12th year for gold. You could argue 10, but we're well past 10. And so we've probably got another 4 or 5 years in this bull market left. What people don't seem to understand, and maybe some do, and this doesn't necessarily mean I'm right again, but I've studied this as long, as hard as almost anybody, is the panic buying mode, the huge, spectacular gains that a lot of us have talked about, really don't take place until the end of the bull market, where you get in, like all markets, into this panic mode. We saw it in real estate, where everybody had to own a second or a third home and, sign your name and get a loan and do it. You saw it in the technology sector. You've seen it in basically all asset classes. This time around, I think that the precious metal sector is going to be the mother of all bull markets. And there's several reasons for that. One is my retirement isn't working. My pension fund isn't going to take care of me. The dollar is losing value. All currencies are doomed. I mean, there'll be so many scenarios happening at the same time. The synergy to move into the precious metals will be beyond belief. But we're not there yet. That's at the end of the market. When is that? No one knows. I'm forecasting it's probably going to be 2014 or perhaps later. So I give a window between 2014 to 2016. As far as where are we now, obviously we're going to start 2012. I think 2012, by the end of the year, you'll see silver around the $60 level, perhaps 65. Gold probably around the $2,500 level, probably higher. I know there's probably prices that a lot of people that bought at $1,900 for gold and $50 for silver are going to be extremely happy with. But you got to remember, if you're buying under 30, it's a double for you in 1 year's time in silver. And if you're buying gold at 1,500, let's say, it's not quite a double, but it's a pretty good percentage gain. Again, this was, I believe, we'll have to wait and see. I see that we're in a mode of what I've kind of coined. And I said, these markets will scare you out or wear you out. We're back into that modality. This move that we just had to the downside, when many of my contemporaries were saying $2,000 gold by the end of the year, it's a lead pipe cinch, bet the farm or whatever, obviously are wrong. Doesn't mean they're wrong in the long term. It just means that it's not going to happen in 2011. I'm sorry, folks. You're not going to see $2,000 gold by the end of this year. It's not going to happen. So those people get scared out of the market. Perhaps they bought at $1,800 or $1,750, or perhaps they went in a futures contract a week and a half ago, and now they're scared to death and they're out at a loss. Those things happen in all markets. It's happening now in the gold market. So you're going to see some backing and filling and a rebuilding of the base. And it's going to take time. These kind of washouts take time to rebuild, whether it's gold or not. Any market takes time. So I'm looking at a somewhat weak first quarter of 2012 basis what it normally does, which is usually a very strong seasonality for gold and silver. It's not going to be extremely weak, but it's going to be weaker than it normally is. And I'm looking for the damage to be repaired over the next several months through the summer. And then I'm looking in the fall and winter of 2012. I do have to give a caveat, Daniel, and I hate talking out of both sides of my mouth. But, in today's environment, it's really hard to get a grip and a good handle on these markets because they are so volatile and so much is happening. There's so many cross currents. As my friend says in London, there's so many black swans flying around that if one black swan hits another one, then all bets are off. And I want to make that crystal clear. Depending on what could happen in the Eurozone, or what could happen in the banking sector, or what could happen with another MF Global, then all bets are off. You could see up limit in gold 3 or 4 days in a row where it just zooms up instantly day after tomorrow. Now, I'm not expecting that, but chance favors the prepared mind. You've got to be of the mindset of the reality of the current financial system. the current banking system, and you have to factor that into your thinking. So I didn't want to let it go that David said this or said that. I gave you my best answer. But again, I have to give the caveat that there are so many modalities out there that could take place that are realistically possible that we have to factor into our thinking. That's why you'd rather be 6 months too early in the gold market than 6 minutes too late. Because if you're waiting to pick the exact bottom, or if this has to take place, or I got scared out of my position, I'm going to wait, or all of these type of psychological mind games that people do with themselves, get over it. Make sure you have a core position regardless of the price, regardless of where you think it's going, whether you agree with me or not. Make certain that you have something real going forward, no matter what the price is temporarily.
Yeah, David, that's great advice, and I totally understand when it comes to the short-term predictions, is the involvement the central planners have in our markets right now. I've been telling people recently that, the Dow Jones and a lot of these majors that Goldman Sachs are involved in and stuff, it's almost, you're not buying an investment anymore. You're just simply speculating on what the federal government or central bank or European bank is going to do next. David, I was recently at the Hard Asset Show in San Francisco. I was kind of surprised. It was pretty light. They were pretty ecstatic. The people who put on the show said there was 3,000 people who showed up. But I noticed when I looked around the name tags of people, because everybody was wearing these things around their neck with a badge, and most of them were, as a geologist or an investor relations person. So I have to assume they're including all these people in their registrants. When you went to the Silver Summit recently and spoke there, you've been to a lot of these conferences for years. Are you seeing more people? I mean, does it seem like more people are coming in, or is it still kind of lighter than what you expect once the bull market really just kind of takes off?
Yeah, now the gold shows have been very fairly light to average over the last few years. And basically, it's recycled people, and I don't mean that in a derogatory way. All I mean is that there isn't a lot of new people coming to these shows. It's the heartfelt investor out there that's been a believer for a long time, and they keep coming to these shows, which I'm glad that they do. And for any market to move up to the next level, you have to have new bulls in the market. You have to have new believers. You have to have people that want the asset group that we're talking about, in this case, the precious metals or the underlying mining equities. And that hasn't really taken place yet, and it will. Again, going back to my statement a moment ago, scare you out or wear you out. There's a lot of people on the sidelines that have contemplated silver and gold for some time, but they're not convinced yet. So there's a plethora of factors that could change their mind instantly. And so I'm not even going to bother with going into those. All I'm going to say is that there will come a time where you see more and more people, new people, coming into the market that will take it up to the next level. But we're not there yet. And one of the best indicators for that will be a gold show, where you go in and it's, 30, 40, 50% bigger than the one the previous year or the previous one you went to, or that type of thing. Right now, the market is pretty static, fairly stagnant. And again, it's going to take some time, I believe, for this to work itself through, where you start working over the nominal high of gold of 1900 and the nominal high of silver around the $50 level. That's not going to happen, I don't think, until, as I said earlier, until probably the third quarter of next year. So that's a time frame that a lot of people may not be happy with in this ADD, instant gratification world that we live in, where everything comes instantly on your text message or your internet. But I'm sorry, the reality of the situation is, as I spoke, that's what I believe. Maybe I'll be proven wrong. Perhaps these markets will take off. As I said, I did give my caveat. There are reasons it could take off instantly, but I doubt we're going to see that.
David, how do you personally buy your silver? And do you look at silver, your entire holdings, as an investment, savings, or are you looking at it as both?
Both. First of all, there's no reason for me not to be honest. I actually did buy some silver this week, under 30, so I'm a man of my own word. My average cost, of course, is substantially lower than that, but I didn't see another asset class that I like better longer term. But I'm not deluding myself that I'm picking an exact bottom. So I look at the precious metals physically as savings, not as an investment. basically we're taught as kids, to save for a rainy day or save for your future or save for your retirement or save for that car or house or whatever. And what you want to do is save, and you want to get in the habit of saving. But you don't want to save in something that over time depreciates and is guaranteed to depreciate. The only thing I can guarantee in the financial sector is that if you save in fiat currencies over time, they depreciate. So you want to save in something that holds its value over time, and that's the precious metals. That's proven again and again and again. Now, you could argue with me that there was a huge bear market in the precious metals, and there was. So you got to use a little bit of common sense here. But right now, where we're at in the financial system, the only savings that makes sense to my thinking is in the physical realm. Now, as far as speculation goes, capital appreciation, that's a different part of the story, and for me, the best place for that to take place is in the precious metals underlying equities. Certainly, you could use ETFs, you could use futures, options, and all that. Those are very sophisticated games that most people are better off just not even participating in at all. The best risk-to-reward profile lies in the underlying equities of producing companies that have strong management, a good balance sheet, and they know what they're doing. They're producing the physical metal at a profit. And those companies exist. And if you have a long-term time frame, meaning a few years, those assets will do very, very well for you. And I still believe that. In fact, I think if I'm correct about where we are in this bull market, then the time frame I gave earlier between 2014 and 2016, you're going to see some of these junior mining companies move in ways that will make the tech sector look like a warm-up parade. I mean, we all know, not all of us, but I'm going to make the presupposition that most of your listeners know that the tech bubble got so ridiculous that there were domain names of I'mGonnaMakeMoney.com that had no business plan and no assets whatsoever that were selling at these unbelievable multiples of infinity, because when you have zero assets and you multiply zero times anything, it's zero. So that if you sell it at anything, it's basically a PE of infinity. The point being that these things got to be absolutely ridiculous. They had no business being listed as stocks, and yet they were. I think you're going to see something similar in the gold and silver arena. But again, I don't see that for years out. But I do believe you're going to see one of the biggest rushes into the precious metals of all time. I really believe that, if you look back in history and look at the tulip bulb mania that took place in Holland so many years ago, and it's alluded to in the movie Wall Street, the latest version of the Wall Street movie, you're going to see that type of thing, I think, in the mining equities. And I'm really, to be honest, I'm not that favorable to it, because a lot of people get burned in those things, but I can't control the markets, nor do I wish to. But that will be at the bottom sector of the precious metals. The top sector, the real significant companies of true merit, will do very, very well, and those, of course, are real assets.
David, do you recommend people go to their local shop, or do you have anything that you go to online as far as buying silver?
Well, I'm favorable for people making their own decisions. I mean, if you're very, very risk-adverse and you want to look somebody in the eye, I mean, most good-sized towns have some kind of coin dealer. Just make sure you check the internet for a price on, Silver Eagle or Silver Round or Gold Eagle or something like that before you go in there, because if you're naive, some of these dealers will take advantage of a naive buyer. I like a couple things. One, I buy and know so many of the dealers and have for years, so I kind of spread my purchases around. But one program that I actually like and I'm favorable to and I participate in myself is silver123.net. That's SILVER, the number 123.net. This is a program where you buy on a monthly basis, and you have the silver or gold or both sent to you monthly. If you wish, you can store it. That's your call. I mean, the reason I bring that up is because some people want to buy silver, but they're older, or they have two homes, or they travel, or they have an apartment, they don't want it in their apartment, or there's a lot of reasons why people might want it held. It's a touchy subject because I've taught from the beginning, as many others, that you really should, touch it. But there are reasons that you might not want to. They use one of the safest depositories that I know of. I've toured the facility. I am behind 100%. And you have another option. The option would be to hold some of it in your hand and also store some of it. Regardless, it's a silver and gold savings program. The margins are low. It's very convenient. It takes about 10 minutes to set up an account. And once you do, you're on your way. And it's a good approach. It takes into one of my rules of silver investing, which is to start small and dollar cost average into the market.
David, where is the best place for people to learn more about what you're talking about, as well as if they wanted to try to reach out to you and contact you?
The best place is just go on the internet. It's an internet-based business, and it's silver-investor.com. If you're not familiar with what I do, I suggest you get on our free email list. It doesn't cost you anything other than an email name and an email address. And we'll send you the 10 rules of silver investing for free. It's something I used to charge for, and I have it for years. I look at it as a public service at this point. And then I do weekly updates on the economic situation globally. I also take questions from readers. Usually I start off with the question of the week, and that is something that someone has phoned in or written in and asked. And it's a good way to get familiar with not only the silver market, the investing rules that I wrote, but how to approach this market in kind of a sane approach. And if you like what you see there and you're inclined to go into a higher risk-to-reward profile, where you want to see the market timing that I have, or how I'm trading, or certain mining companies that we outline, that type of thing, then you can consider a membership service. And those, again, are for people that are at the next level that really want to participate in this market in a significant way.
Yeah, I agree. Anyone who is serious about silver, I mean, I personally have over 50% of my net worth in silver or silver-related investments. Your members area is an absolute must. You do the best analysis as far as, if you're looking for a short-term trade or a long-term trade. If you don't understand charts, but you want to know what's going on with the charts, I highly personally recommend checking out David's members area. In fact, I believe I have to renew mine at the end of this month. So anyway, David, thank you so much for taking the time out of your day-to-day to join us and give us your analysis of the current silver market.
Well, thank you for having me. It's always a pleasure, and thanks for the build-up. Yeah, I just want to comment on the members section. I mean, unless you've been there, I couldn't say probably in half an hour everything that's in that section. I've worked on it for so long and so hard, and I've had so many contributors to it. But for a quick example, we have making green off the pinks. That one little extra article that's in the special report section for members only will teach you how to trade Canadian stocks without getting burned. So, there's so much on there. Like I said, couldn't describe it all. But thank you for letting me have your time.
Thanks again, David. Appreciate it.
Bye for now.